and welcome to this special broadcast. I am Ritu Singh. February the 13th. This day may well be as significant for bankers and borrowers as the 26th of January, when a new constitution was drawn up for the Republic of India. In a near midnight swoop, the RBI unveiled a new charter of rules for recognizing default loans and how to resolve them. RBI has ordained what is financial weakness, and failure to recognize them will invoke special penalties on banks. Also, special rules for loans over 500 crore rupees and over 2,000 crore rupees. All of that and more in this big NPA cleanup overhaul. Lata Venkatesh joins us to take us through all of these changes that have been brought about and all the old guidelines that have just been thrown out the window. Lata.
Yes, all the old alphabets, SDR, strategic debt restructuring, all those are thrown out of the window. It's important, if you're writing a software code and making changes all the time, at some point in time you have to write a new code. So that's what they've done. Now first, let me just take these cases over 500 crore. The new rule is that there is something called a CRILIC, which is RBI's database of all large loans, central repository of large loans. Okay. If there is a default in 500 crore plus loans, they have to be reported monthly. Until now, it used to be a quarterly reporting or an annual reporting. Now, it has to go monthly. And from February 23rd, that is in 10 days to April 1, these cases of default have to be reported on a weekly basis. So that's the first charter. And the resolution plan will not be considered implemented if the bank is in default with even one borrower. So even if with one borrower, 1 week he has defaulted in the next 8 weeks, then it will come into the CRILIC as an NPA. And then the implementation will be considered done only if 2 rating agencies approve it. For cases over 100 crore, 1 rating agency has to say that this is RP4, which is, kosher. Investment grade. For loans over 500 crore, 2 rating agencies will have to say this plan is kosher, this is investment grade. That is the meaning of RP4, a resolution plan level 4. There are 7 levels, but one level is, of course, if it is AAA, investment grade, you can't expect an NPA plan to reach that. At least it should reach RP4, which is investment grade. Now, the more important point is loans above 2,000 crore. In many of these already, they are under SDR, S4A, CDR, some such scheme. What Reserve Bank says is that for these schemes, these loans which are NPAs and are already under such a scheme, they get 6 months. If within 6 months, this resolution plan, this SDR, say for an RCOM, say for Renuka Sugar, they're all already under implementation. If within 6 months it's not implemented, it will go to the bankruptcy code. And if they are not already NPAs, but a plan is going to start, then from that reference date to 6 months, it has to get implemented, or it goes to the IBC. Now, the important point is this word specified period. Note that word very carefully. When will it be upgraded? First of all, the company in question, say JSPL or RCOM or whatever, should not default throughout the specified period. What is specified period? From the date you implement up to repayment of the first 20% of the principal. When a resolution plan is put into practice, put into implementation, first the company only pays interest. It gets, a 1-year period not to pay back principal, but it will be considered under, it will be considered NPA till the first installment of the principal of 20% is paid. I think that will come up for you, that 20% principal. The accounts can be upgraded only after the specified period. Now, let me just give you some more general rules. So, you've got an idea of the 500 crore plus loans, for the 2,000 crore plus loans. Just some general rules. RBI will announce new reference dates for loans above 100 crore to 2,000 crore. That is, for the moment, they've given you a timetable for loans to be taken to IBC, provided they are 2,000 crores. For below 2,000 crore, you will get a timetable eventually. That's the set of rules. Over to you, Ritu.
Well, Lata, thank you very much. So some of the key headlines from those, as Lata was pointing out, the first one is, All of the existing schemes like SDR, CDR, JLFs, 525s have been thrown out the window, and they will be replaced by this new set of guidelines. The second one is that for aggregate exposures of over 2,000 crore rupees, the RBI has given lenders a timeline of 180 days from the starting date of default to implement a resolution plan, failing which within the next 15 days, they will have to send these cases into the NCLT under the Insolvency and Bankruptcy Code. And third, it is mandatory for banks to disclose any default for the acrylic database within a week. So every Friday, all of these defaults will have to be reported with acrylic for this data to be available with the Reserve Bank of India. And now joining us to discuss this further, some eminent guests. First, Sunil Srivastava, the Deputy Managing Director of Corporate Accounts Group at State Bank of India, Mr. Ashwin Parekh, the Managing Partner at Ashwin Parekh Advisory Services. Abhizar Divanji also joins us from EY, as well as VG Kannan, the Chief Executive of Indian Banks Association. Gentlemen, thank you very much for joining us today to discuss these very important changes to what is the NPA overhaul in the resolution of stressed assets. First, Mr. Srivastava, let me start by asking you, since you're one of the biggest insiders into the workings of corporate India, surely, the idea behind introducing these new rules is to clean up the banking system and not really incapacitate banks. How do you read these new rules that have come in, with strict timelines, whether it comes to disclosures in notes to accounts, whether it comes to sending these cases into NCLT if they do not adhere to that timeline? How do you view these set of rules? I mean, they remind us of what Deepak Parekh, once said about too much anesthesia sending patients into comatose.
I think, good morning to you, Ritu and Lata. Actually, it couldn't have been more propitious because on the auspicious day of Happy Shivratri, you have a change of an old order and a new order has been notified. So that's on a serious note. I think it's a very comprehensive notification, and it would encourage early recognition, rectification, restructuring, resolution, or recovery as the case may be. Okay. This is absolutely was required, and you see, the earlier dispensation had failed because of various reasons. Yes, for a CDR or SDR or whatever alphabet you would like to use. But frankly, there are issues which will not also need to be attended beyond these regulations.
Yeah, Sunil, first I wanted to ask you, this one from February 23rd to April 1, you'll have to report on a weekly basis. Are all banks sufficiently connected with core banking and other, software that every branch and every regional office that finds such a default will be able to report it to the head office?
You see, even now, the classification of SMA 0, 1 and 2 is being reported, not to RBI, but within internally. Yeah. To the controllers on a regular basis. We get it on a daily basis, actually.
So you don't see a problem in that?
I don't see a problem in reporting.
Even for smaller banks? Well, SBI is a different class, but other banks could have a problem.
I'm sure these are very minor, tool in the CBS, and all the banks would be capable of adhering to it.
Okay. Sunil, stay on. Let me ask Ashwin Parekh as well. Mr. Parekh, do you think that, even if one, bank finds the loan a bad account, all banks will have to, classify it as an NPA, and that is immediate because on a monthly basis you are reporting. Do you think there can be an immediate swelling of NPAs, rise in NPAs?
Well, I mean, there will be, I'm sure, because what may now happen is with stricter reporting, and I'm glad that this stricter reporting regime is now being put in place, it will get reported. But however, we have to somewhere connect this with the recapitalization of public sector banking. I suppose somewhere along I'm reading a message which says that if the banks are now adequately capitalized, let them first clean up their books first, let them report all the NPAs, let them not do evergreening, and so there are evergreening related norms as well. Yes. And there are strict reporting norms. So I suppose I'm connecting the two together actually.
Okay. Mr. VG Kannan is also with us.
Yeah, Mr. Kannan, the Chief Executive of the Indian Banks Association. Thank you very much for joining us, sir. First, What do you make of this new regime compared to what we had earlier seen with the several restructuring cases? Is this decisively a better regime to follow? Mr. Kannan?
Okay, I think we'll
right,
have to redial. Why don't I pass the same question to Sunil? Sunil, a blank check of a question. How is it different?
Well, in the sense that now there are completed and prescriptive timelines which define the end game. So this is a recognition, this is an early recognition for every participant and every stakeholder. From the point of view of the promoters, they'll have to wake up much earlier. Now, see, it defines the end game, but that's why I said there are a few more structural refinements which would be required going along the way, and I'm sure they would be coming either by the government or RBI. This will definitely come in because, see, business has a lot of uncertainty. And now the ability to manage risk on the part of the promoters themselves who would now have to recognize the problems much in advance because they're the first ones who would actually know the problem. They could perhaps know the problem even at the SMA,
Zero.
Standard, they're not an SMA 0 as well because policy changes, technology changes, market changes. So
But
this is really going to be a test
Srivastava,
of
as far as the
promoters.
immediate impact is concerned, will there be a spike in NPAs? I mean, we saw SBI's results come out recently. A big chunk of non-performing loans was identified. But for the system, do you think these guidelines mean an immediate rise in NPAs?
No, I don't think so. You see, every bank is now conscious of the divergence, and every bank will try and recognize the problem much in advance, not giving the regulators a chance to point out divergences going forward in the future. But definitely there are a few cases which have been implemented in the S4A, the CDR, the SDR cases, which will need, whatever corrections need to be implemented now will have to be done in a hurry in that 180-day period from March, that's been given now.
Okay,
so definitely there are a few cases which have not been implemented fully. And the key there is not that the plans have not been developed on a firm footing. The fact is of the implementation and the time that it takes for various banks to give their sanctions, which actually delays the process of implementation.
Actually, Sunil, let me understand this. Does this mean that, take for instance, say Renuka Sugar or take, say, RCOM? Now you get 6 months because I think both these are already, known cases which are under SDR or some other scheme.
I would prefer not to discuss individual cases.
No, you don't discuss names, but do we have to understand? I'm trying to understand for an investor audience who will be watching the show. Should we understand that these which are already in a scheme will get 6 months, and if in 6 months it's not implemented, it goes to NCLT, right?
See, whichever cases are seriously under CDR or SDR or S4A, okay, they will have to be rated. And those two ratings will have to be taken by two, depending on if 500 crores and above, we'll have to take it from two rating agencies.
Okay.
And if they point out that, based on the restructuring, they are BBB minus and above, they are kosher.
But for that 500 crore and above, you don't have this 6 month issue, no?
Yeah,
for over 2,000 crore only, within 6 months, you have this deadline, right?
Yeah, so all these cases would be about 2,000 crores and above in the CDR, SDR and S4A.
Okay.
Definitely, there will be a greater urgency on the part of all participating banks to implement the plans in totality.
Okay, so
Perhaps,
what about Kannan, Sunil, I'm just going to your former colleague, Mr. Kannan. Mr. Kannan, what is your sense with this requirement, as Sunil says, that you have to even get them rated, whatever the Renukas, the steel companies, the construction companies, and even the telecom companies, they have to also get rated. Are you getting a sense that there will be an immediate spurt in NPAs?
Yeah, that could be possible, but it's also possible that the resolution plan will be properly worked out in such a way that they will get an RP4 rating. And overall, I feel that this particular circular is actually a very simplified version, empowers all the banks to do whatever they want in any form. It doesn't give any restriction saying that it has to be sustainable, non-sustainable, etc., everything. How much has to be converted. You can use any structure you want and gives full freedom. At the same time, as Sunil was mentioning, it is also incumbent on the borrower to ensure that his account is standard.
Absolutely. We're also joined by another banker, Mr. Rajkiran Rai, the Managing Director of Union Bank of India. Mr. Rai, thank you very much for joining us on the show. First question, you've seen the new overhauled guidelines on resolution of stressed assets. What does this mean immediately in terms of your reporting of non-performing assets? Do you see a spike coming in the coming few quarters because of these guidelines? And how prepared are the banks to take these?
Yeah, good morning. I don't think reporting is the issue. Because as of now also we have these dashboards and every day we get data on these defaults. So that we will be comfortable reporting part. I don't see a spike coming. Actually, the problems are mostly identified. They are in our restructured book, and major portion of is already identified. But one thing we should understand is regulatory is going to be more strict on these accounts, the way we restructure, the rating coming in, even though it is a part of IBC now. But at the same time, what is our learning from this cycle is very important. Last 4 or 5 years, so this bunching of NPAs and the bunching of provisions have happened because we had a lot of restructuring plans which did not yield the right results. So hopefully the regulator is looking at as a mechanism so that in future we do not have this kind of issues. The problems are resolved in the first stage itself instead of postponing.
Yeah, that point is taken, but to get to that point, we have to pass through a huge period. That's what is worrying. Abizar, as a person outside the banking system and yet very close to it, what are your thoughts? I mean, our first desire is to know immediately whether there could be a spike in NPAs. Your sense?
Of course, there will be a spike in NPA. I think that is the intent of the RBI also. And why I say so is because I think one of the loopholes that they wanted to plug is people declaring SDRs and effectively getting an 18-month moratorium. That's kind of gone away now because they're saying that any provision has to be recognized now. So I think failed SDRs will be a big source of provisioning that will happen to the banking system, I think, in the next quarter, for sure. Having said that, I agree with Mr. Kannan. These are very simplistic rules, and great that they are very simplistic rules because it allows a lot of flexibility. Also, I think it will increase the supervisory burden on the RBI because as plans become more flexible, they become more subjective, and hence the provisioning on them becomes that much more difficult. So I think we will see this divergence widening over quarters as we go along.
Actually, Abhisar, I was wondering why...
As the banking system gets used to more subjective norms.
No, actually, I thought reducing the areas of subjectivity, because now the Reserve Bank is giving you a non-exhaustive but indicative list of what is the meaning of financial weakness or financial difficulty. And that's some exhaztive list.
I agree with you. Yeah.
See, inability to maintain required margins, drawing more than sanction limit. 1 minute, Abhisar. Delay in payment of liabilities under letters of credit, excessive leverage. And, you know, excessive leverage, look at that. Inability to meet financial loan covenants. Failure to pay statutory liabilities if you didn't pay your EPFO or, you know, sales tax, GST or something. Undue delay in submission of accounts to the stock exchange or incorrect submission, delay in publication of financial statements. And look at this, steep decline in production figures. I mean, if there is a production downturn or a global commodity downturn or something, steep decline in production figures, downward trends in sales and profits, elongation of working capital cycle.
Excessive inventory buildup, which impacts the real estate companies that are sitting on so much inventory. Do they immediately fall into this list then?
Yes, Sunil, now you tell me. If you don't recognize any of these weaknesses, then you are to be faced with monetary penalties. Just your reaction to this identification of weakness.
Certainly, you see, these are as much a responsibility on the bankers as much as they are for the borrowers themselves. So eventually, a correction will have to take place much before the default occurs, which means that otherwise they go to the NCLT, and in the NCLT, obviously, these guys will be debarred from, you know, if they prolong the period too much. So I would expect that the recognition would come in much earlier, and the resolution, which would actually be devised by the borrower himself as to what is the corrective situation, which conforms to the regulatory requirements, would come to the fore much earlier than it is coming today.
Okay. That is why I am asking you. As you say, it will come, come into your ken much earlier because the borrower also has these responsibilities. In that case, to repeat Ritu's question, immediately do you think that for the next 12 months, there could be accelerated NPA recognition or classification?
See, wherever we are facing a problem on resolution, and these guys have failed SDR, for instance, as Abhisar mentioned, definitely there would be these would be reported as NPAs.
A question.
Or if these questions, if we are looking at the SMA 0, 1 and 2, the efforts to clean up or to actually to take corrective action would be initiated at SMA 0 stage itself.
Question
now JLF and caps have been removed, so the onus now lies on the bankers as also the borrowers to come up with a resolution plan much before it shifts into a default situation.
What is going to happen? Say Union Bank reports the monthly defaulters, and the impact falls on State Bank of India because there would be one fellow who is defaulted over there, and this is monthly. So let me get Mr. Padmanabhan into the point. Mr. Padmanabhan, until now it would was the reportage quarterly or annually? Because if it is quarterly, because if it is in a month, suppose that a loan was due on say 10th, and the borrower doesn't pay, but he pays on say 20 the next month 10th or something like that. So he doesn't pay on the 31st day, but pays on the 51st day. Will there be a problem that you can't have even within the month upgrading, and therefore more people have to be reported? Mr. Padmanabhan.
Lata, it's right. I think the challenge that the new guidelines throws up is we need to do a real-time monitoring, recognition and reporting. And the first time the slippage happens, then you will be able to classify this as a performing asset only after the entire arrears get paid. So once so interest say the slippage happening, so within a week, if you are reporting every week, within a week this happening, that's a different matter. But once you have recognized this as an NPA, so far we were doing this on a quarterly basis. Now, if you are going to do this on a real-time basis, I suspect there could be some additions which could happen as far as the NPA numbers are concerned.
Mr. Sunil Srivastav, do you concur with Mr. Padmanabhan?
See, right now the slippage happens only after 90 days.
Yeah.
Right. So it is an SMA 0, 1 and 2, which means that the notification that early some action has to be initiated is going to come on a real-time basis. Okay, and that resolution has to happen as soon as you come to know that, okay, he has slipped into not paid the interest for a particular bank when it was due.
So you're agreeing that there could be a accelerated recognition?
Yeah, absolutely. See, you look at SEBI. SEBI was also coming with that circular of the derating based downgrading of the rating based on the slippage on the inability to service on a particular date. Now, I think that was a very timely thing. Now they have to realign the downgrading of the rating to the SMA 0, 1 and 2 stages, which will force banks to actually come with a resolution plan, or also the borrowers to come with a resolution plan much before the default happens.
Okay, from what Mr. Padmanabhan is saying, I have two questions, Ritu. First one to Mr. Kannan. Mr. Kannan, as Padmanabhan is saying, now you have real-time recognition requirement. Are all banks capable of... Sorry, sir?
I'll respond to what Mr. Padmanabhan said. I would say there will be early recognition of stress assets, not necessarily NPAs, because the moment you recognize the stress assets, today what happens is only when it becomes SMA 2, you start taking action. Now what will probably happen is, once it becomes SMA 0 itself, you start having the meeting, have the discussions. To be frank, as Sunil rightly mentioned, in many advanced countries, suppose a particular payment is due on, say, 25th of February, and he knows in advance that he's not going to meet it, he will come and inform the bank and say, I need this and I will be in a position to resolve it. You have a meeting, you discuss it and say, okay, within 10 days it will be resolved. Otherwise, you need to say, okay, I will postpone this. All those things can be done. What the circular actually says is, please take advanced action on any probable stress in the system. And in case the stress is already taking place by way of a default, SMA 0 or 01, please convene, have a proper resolution plan in place. And resolution plan, they've given a wide spectrum of resolution probabilities. I think everything can be taken. It can be understood. What they're saying is start the action from the day 1 of the default rather than on day 91 of the default.
Yeah, no, that is, of course, the enlightened thing to do. I take your point. Just 2 questions before we take our first break. Rajkiran Rai, I just wanted to ask if all banks have this bandwidth. I mean, SBI may have, maybe even Union will have, but will all banks be capable of this real-time reporting? And secondly, the bandwidth to deal with it?
I think with the core banking, all the banks have this capability. Even though there may be some erroneous reporting in the beginning, I'm very sure these things will be corrected. So adding to your NPA spike issue, I don't think RBI has tinkered with the 90 days norms. What they say is 30 days you start looking at the account and the restructuring. And another conclusion we need to draw is, if a company has got a temporary issue, it can be resolved very easily by restructuring. But the company is having major problems in their cash flows and other issues. So like right now, we have so many mechanisms to postpone that problem. Now that long-term issues have to be tackled differently. I think that is the purpose of this guideline. So we need to understand differentiate between the temporary issues and long-term issues which the companies face and act accordingly.
Mr. Srivastav, if you could come in on that, do you think there's, firstly, to start with, enough capital with the banks to adhere to these new guidelines, the strict 180-day timelines and all the provisions that will have to come along with taking in account to NCLT?
Ritu, you should address this question to Anshula, no? She's the CFO of the bank. I look only after the last credit.
Sir, I have one more question for you.
Just your guess, Sunil, about the banking system. We've just got this huge amount of capital. It doesn't look also all that huge now, do you think? Do you think we could, or will the money be only enough for slippages and nothing left for growth? Your sense?
I would assume that, with the capitalization, recent capitalization and the bank being allowed to also raise capital, maybe the government is also diluting its shareholding a bit. There would be opportunities for the bank to raise further capital from the market. I don't know whether each individual bank will have enough capital to grow or to meet its NPAs. But at State Bank of India, I think we are comfortable.
The SBI is a different case. I mean, obviously, there are so many banks with much higher NPAs and perhaps not the same clout to... Yeah, please.
You see, I would expect in this policy, because we are trying to encourage borrowers to identify the problem and come with a resolution much before the event. There is one clause which actually it acts as a disincentive, and therefore, if a borrower is a standard asset and servicing his interest in time, but recognizes a problem can happen on account of variety of reasons.
Yes.
You don't have certainty in business. And he initiates the action while as a standard asset itself and as a non-SMA zero, he will be penalized for the period that his restructuring is going on is as a substandard.
Okay.
Now that needs to be changed so that, it will encourage people to come with the resolution and the identification of the problem much before the
Okay. Sunil, we'll certainly highlight that. I would urge all of you to think of those issues that can be tweaked. So Sunil's point that a standard borrower who red flags a problem before he gets into stressed or NPA will actually end up pushing a problem both for himself and for the banks by being considered substandard during the period of implementation of the resolution plan. We have to take a break, gentlemen. Please stay on. We are also going to be joined by Sanjeev Bhasin, who is going to give us what the stock markets will make of all this when they open on Monday, on Wednesday.